So basically, in a world where the biggest bond markets are prone to persistent debasement with lower interest rates, and in a world where they can be confiscated, gold in the central bank's own self custody is attractive as a sovereign asset. Around the margins, Bitcoin's interesting. It's only a $2 trillion asset, so it's like a tenth of the size of the gold market. It's more volatile. It's only 16 years old, but among some smaller countries, Bhutan, El Salvador, it's interesting to them. It's also a trading mechanism for countries that are sanctioned. It's an open source settlement mechanism that they can turn to, and so I do think we're seeing a upshift in the appreciation of neutral reserve assets. Which, going back to that Stephen Myron paper, he called that out. He said basically, as if we make the Treasury less attractive as a reserve holding to make the dollar less overvalued, then it's probably this could benefit some other currencies, but it'll probably primarily benefit neutral reserve assets. And he mentions gold and cryptocurrencies, with Bitcoin being the by far the dominant one. And so I think that's the world we're going in, a more multipolar world that is then tied together with some of these neutral reserve assets.